Aloha and welcome to Java. Thank you kindly for joining me. It's September 25th, 2024. It is Wednesday. I've got a couple of critical things I would like to get out prior to the market open, if at all possible. Now, it is also our Discord discussion day, 5 o'clock p.m. Eastern Daylight Time, just as a reminder after Greg's live stream. So we've got a little bit of time between that and our discussion. So if you've got anything you would like to speak about, please bring it in there. So moving forward right now with the stocks, we've got a couple things. First off, we've got the fear gauge market risk indicators both rising now. The MMRI is at 234.3. There's major manipulation, as you know, going on with not just the rates that everybody is talking about, but the underlying with the currencies. And I'll speak about that in a moment. But as far as our fear greed, we are deep in a greed area. We've got a lot of retailers that are jumping in now. Stocks going green. They look as if they're going to be green on the open, but futures telling a bit of a different story. Now, short term, we're looking at a pullback as a lot of these stocks and then also indices are running into resistance. So, short bit of a pullback is what it looks like they're likely to do. From there, possibly run a little further. We've got cryptocurrencies up. We've got gold and silver up. Things are hitting record levels, all-time highs. We've got most of the Dow and the Nasdaq, S&P 500 all reaching for their all-time highs again. So, what is going on beneath this? First off, we've got Chinese stocks, as this story says, extending gains after Beijing's stimulus bazooka. Now, basically, China came out and their economy is beginning to really show signs of deterioration. So they have said basically they're going to backstop their economy and sacrifice their currency. Now, below all of this, with the Fed rate cuts, as well as China, this is a currency war that is beginning to really unfold rapidly before our eyes. So you can see from this next story saying Chinese yuan strengthening against the US dollar on Wednesday. Now, how can the yuan strengthen after they are doing all of this stimulus, which typically weakens the currency? And the answer is that it's because the US dollar is weakening its currency at a faster pace than the yuan. So now, what they're calling about their stimulus bazooka for China means that the US dollar is dwarfing it. So, how do they balance this out? On the back end, we're looking at trade. The trade game is the uh, buffering mechanism, if you will, between these currency devaluations and the currency war that is going on. So we've got China's exports at risk from an anticipated United States port strike, the typhoons that are going on, and then we've got this all coming from a container trade export. Now, I've been speaking about this for a while. If you want to watch the real economy, we keep an eye on shipping and trade because it tells the real story of goods that are actually moving across and being traded. Now, United States has been running a trade deficit for some time, and they've also been hiking rates, which has increased their currency. So it's given them power to purchase all of these goods that are now sitting on their docks. And now that it's time to pay the bills, they're going to devalue the currency tremendously and pay them with devalued dollars. Now, this is another method that they're basically exporting massive amounts of inflation and this currency war that is going on. This is not by mistake. So basically, we're seeing perfect examples happening between China and the United States, but it is going on between multiple countries right now. So, with this, we've got Alibaba partnering with Nvidia. They're working on advanced artificial intelligence and autonomous driving. So, they're talking about positive momentum. Right now, we're watching Alibaba is a good uh, buy, not financial advice, because they are looking at expansion on this partnership with Nvidia. Now, a lot of these basically stocks that have grown in value, through the sanctions that have been happening with the United States. So we've got this balance underneath. They're all devaluing the currencies, and that basically means that all real assets, including stocks and businesses, are going to increase in value as denominated in dollars. Now, if you reprice these in gold or silver, you'll see they're leveling out, and you can see the real story going on behind all of this. So I just want to bring this to the forefront that we are now beginning to watch the basically unfolding of major currency trade wars, and this is after the currency devaluations coming into full swing. Okay, with our calendar today, we're getting new home sales in the United States and Federal Reserve Governor Kugler speaking. So Thursday prior to market open, we're getting jobless claims, durable goods orders, and then the second revision of the United States GDP. So gross domestic product, almost one third of it now is war and war products, weaponry that we're shipping out to foreign countries. So a lot of this more inflation, more dollars that has just been printed in order to purchase these things and send them overseas. This is how all of these distortions in the market are happening. And I just want to bring these up to you. So, what is going on with uh, the ECB right now? The HSBC, the major bank over there, is talking about changing their call, saying that they are expecting now cuts at every meeting for the ECB starting in October. Now, we've got to watch this closely because these central banks are walking in lockstep in the Western world. They're doing this so that they don't devalue each other's currencies in too much of a major distortion, hurting the economies. So, with these cuts coming at every meeting starting in October, they are also going to experience massive inflation along with the other Western currencies. And the last to fall will be the US dollar, since it's still currently world reserve currency, as well as a strong military to back it, at least at this moment. Now, we've got Indonesia talking about completing a EU free trade deal by next month. So this is a resource grab. Now, the EU, as well as the United States, trying to seal up a lot of trade agreements in set amounts. This is basically wrapping up the resources and the amounts that they're trading at set amounts of dollars that are about to be massively deflated. So whoever can get these deals first moving forward, and contracts basically pre negotiated as what they are will give them a boost. So, with this, I'd like to speak about this corporate insolvencies set to hit the highest level since 2017. Now, this is a predecessor of the unemployment. So, apologies for the background noise and voices. I'm still traveling. So, with this, we've got corporate insolvencies that are going through, set to hit highest level. Now, when businesses go out, they basically fire everybody that's working for them. They're not going to continue paying them if they're not producing anything. So, this is predecessor for higher unemployment. When this higher unemployment comes in, that is when the real recession will begin kicking in. So, with this, we've got credit unions and bank mergers tying record deals in New York. As I had said before, there are going to be many more bank mergers and insolvencies going on. They're not done with that yet. So we've got another one, a deal with Liptown Bank's profile. So this story basically, at the base of it, is saying that purchasing out their rival for pennies on the dollar is a more productive use of their capital than doing share buybacks. And the importance of that is just showing basically how the shift in capital is going to happen. Okay, with this, I've just got a couple of other things I'd like to go over. The first one is in Hong Kong, the e-HKD, sister central bank digital currency, basically expanding into tokenization and programmability. Now, what does this mean? This means that they can code their CBDC to be utilized within geographical areas or also give it expiration dates. So if you get paid in CBDC, you could be forced to spend it before a particular time. You're not allowed to have savings. So these are just some of the things coming forward. And we've got in the second one, stable coins and crypto threatening fiat money dominance in Eastern Asia because they are now all beginning to trade in these e-currencies. And this one is just quite a bit surprising. We've got Bybit spearheading this, looking at Muslim investors with Shariah-compliant crypto accounts. So spreading across the board, getting adoption, and basically just expanding at a rapid pace. I think this will be the uh, shift that will basically be the reevaluation of whatever currency it is that's going to be used. So, with all of this, and they've got artificial intelligence moving to Web3, we've got senators proposing artificial intelligence civil rights act to address the sinister side of artificial intelligence. Now, basically, what they're saying is that AI algorithms are making decisions that are denying mortgages to black people above white people. And this is not a joke, it's serious. That they're saying that this discrimination happens from artificial intelligence. And what it boils down to is who's doing the training with this. Now, this can spread across all aspects of artificial intelligence, and it is the danger that it can be biased depending on what information you put into it. So, with this, I'm going to leave you all prior to markets open. I've got to get going. And until I see you again, my friends, stay free.